20 habits of highly successful traders. Tip number 5. They approach trade number 5 with the same mindset they did on the 4 previous losing trades. So that is definitely something that was on my mind this morning as I started off red. That's something I wanted to talk to you guys about. Also, I would highly recommend this video, 20 habits of highly successful traders. The things on here definitely come into play as a day trader, swing trader, investor, and everything. So definitely something to check out. You guys can type that in on YouTube if you guys want to see it. It's from some other channel, but I definitely found that very, very useful, and I think about it all the time when you start off red. So we'll talk about psychology and some of the mindset that came into play this morning on Market Open Trading. What's up, guys? It's Miguel here with Market Open Trading. So this morning I started off red. I talked about WHR, which was a really good short. It looked like a really good short from last night's previous action. So it gapped down below 52-week lows. It looked very good, but unfortunately I got kicked out of it. It was basically just a quick flash up. It ended up kicking me out, and I ended up losing on it. Actually, I ended up losing a lot more than I wanted on it. I got skipped over on my stop, and I got a horrible fill on the way up. So let me go ahead and link this up, and I'll show you guys what I did on the trade. So this morning, WHR was the first trade I took, and just like I've been doing lately, I've been taking a lot of opening range breakdown. So within the first 5-minute candle, I'm looking for either indecision candle or I'm looking for a red candle, pull back, and then it breaks down below the lows. So right here, WHR was gapping down below 52-week lows. So which means to me, typically that investors are going to jump ship and just get out of it, instead of if it gaps down to 52-week lows and it comes down to it, a lot of the times people will come into it and buy it up. So, but since it's gapping down below, then that means that, to me, that investors are jumping ship and they're getting out. So, here on the 5-minute candles, you'll see here that is big range candle. So, from 136.80 or so to 132. So, that's a pretty big candle. Now, from 134, it pulled all the way down. It broke down below lows at 132.50. I went ahead and got short here, 150 shares. So, I was actually risking $200. Now, the reason why I was risking, there we go. I was risking $200 because I thought this was it looked like a very, very good short. Which, I mean, in theory it is. I ended up getting flash kicked out. So because I did have a hard stop, I was looking at other stocks, so I didn't have just that one on my screen. So let's see here. I'm actually going to pull it up on the 1 minute so you guys can see. So I actually ended up taking it on the 5 minute, but I want to show you guys a little bit of a closer look of what actually ended up happening. So WHR here gapped down. So first 5 candles, 1, 2, 3, 4, 5. So that's the pull down, and then it pulled back. Next candle opened up at 134. It came in. Now this is the candle that ended up kicking me out. So I put my stop up here at 134, and you'll see here on this 1 minute candle, it came all the way down to 132.80. It went up and over 133, 133.50, 134, almost came all the way up to 134.50. It basically just flashed up. It kicked a whole bunch of people out, and then it just came back in my direction. So you'll see here that it is currently at 128.63. So if I had not have been flash kicked out of this, I definitely would be up at least $200. I was looking at Facebook, I was looking at Triple M, I was looking at PayPal as well, and I put in a hard stop in the system because I'm not able to keep a track of all these stocks all at the same time. I have this monitor, then I have another monitor that's got 9 stocks on it, and it's kind of a lot. Sometimes you just have to put hard stops in, unfortunately. So now you'll see here I got kicked out of WHR. Now I got kicked out. My stop was going to be 134.01. And I put a stop. So that means at whatever price, just get me the hell out of the stock. So I got kicked out at 138.35. Since it was a flash up, I got just a horrible fill. I mean, it could have been worse. It could have been a worse fill. I could have gotten filled all the way at the top at, actually, no, I take that back. I actually did get kicked out all the way at the top. 134.35. I got the last possible shares to buy back, and that's how I ended up losing it 276. So this is kind of where it comes into play. I'm almost to my max loss, and so they approach trade number 5 with the same mindset they did on the previous 4 losing trades. Now, I haven't had 4 losing trades, but you're starting off red. You're starting out almost at your max loss. So you're just in a bad place mentally, and whether it's almost $300, you could be down $1,000, you could be down almost $10,000. It doesn't really matter. It really depends on what your risk is. So you're just starting off red, and you're almost to your max loss. Now, you have to take into consideration the next trade could either bring you back, but you don't necessarily either out of revenge hop back into WHR. I could have, and it would have worked out, but that's typically the wrong thing to do, because if it is coming back up and it does have a lot of volume behind it, then a lot of the times you're just going to get kicked out again. It's happened to me too many times where, wow, hold on a second. Looks like Triple M is just rocketing up. I'm thinking 200 here is going to be a magnet, but I'll talk to you guys about that. Actually, I actually did end up taking that trade, but the next trade I took was actually Facebook. So now Facebook, let me bring up the SPY, and I'm going to bring up the Qs. Qs right here. Okay, so now I ended up taking Facebook. You'll see I took it on the 5-minute as well. It flushed down real fast, came right back up over the highs. It pulled back to a moving average. So the 9 in VWAP, I took it here over the highs at 215.65. So actually, no, I take that back. It was sitting right around here, and it went red. It went red, and then it started coming back up green. I said, okay, if this green candle holds, I'm going to go ahead and get in. And I got 230 shares right at 215.47, and my stop was going to be down here at 215. So I'm risking about 40 cents, and I went ahead and got in. The candle went green, it held, and I had a stop loss of a whole number. So now here I was looking for about 40, 45 cents or so. So I was looking for it to come back and over 285. Somewhere, actually I really wanted somewhere around 216. So 216.95-ish, something like that. So now what ended up happening here is I actually started seeing the Qs breaking down. The Qs are the top, is the NASDAQ, and which is mostly comprised of the tech sector. The tech sector being like Amazon, Facebook, Nvidia, Google, things like that, big tech companies. And they will basically mirror each other. Although Facebook does have earnings today, so it should play a little bit different than the market. But a lot of the times it's highly influenced by what is currently happening in the Qs and the SPY. So the Qs is mostly tech sector, and then the SPY is comprised of the top 500 stocks. So they're basically in both. And if the Qs fall, a lot of the times the SPY will follow. So usually the Qs will fall before the SPY. But if the Qs start falling, to me, that means that the tech sector is going to start coming down, which means that Facebook is inside of it. So instead of, when I took this little flag here, it's not really the best looking flag, honestly. But when I took this little pullback here, I saw that the Qs started falling, so I decided to get out. So Facebook, 230 shares. Stop was about 47 cents or so. And I actually hopped out a couple of minutes later. So you'll see Facebook, I was in at 947, so it should be this candle right here. And I hopped out at 215.35, so I ended up losing $27. So at 957. So right here in this candle. Now, if you'll notice here at 955, the Qs had broken down below the lows. That is the reason why I decided to get out of Facebook. I'd rather play it safe than sorry. I'd rather lose $30 than, end up losing the whole 100, 120 or whatever. If you do end up catching some slippage. It looks like I would have gotten my target on here, unfortunately. So, I hopped out of it. I played it a little bit safe. I did not like what the Qs were doing during the time, so I decided to get out. So I lost $30 on Facebook. Now, a little bit ago, I was talking about how if you break down below the 52-week moving average, or 52-week lows, sorry, the 52-week lows, investors will start bailing out of the position. But if you gap down to the 52-week lows, people will start hopping into it. It's an actual strategy where investors will hop in at the lowest possible price, or the lowest possible price that is had within the past year, which means that 52-week lows is a buying point for a lot of investors, people that are looking to hold on to this company for a very long time. So the 52-week lows, were I marked them out here, they were at 191.48, and I noticed that Triple M had reported earnings. Now, obviously, they were not very good since it's gapping down here this morning, and I noticed that it was consolidating across. It's holding VWAP, it's holding the 9, and it's starting to curl back up. So I said, okay, if it comes back up and over 194, actually, no, I said, you'll see the high on there. It says 193. What is this? 193.93. So I said, I'm going to put my stop at 193.94, a buy stop, and then I'll put it at, I think maybe I put like 194.15 or something, for 75 shares for it to get me in. And I thought, okay, it might hit 194, 194.01, 05, 010, something like that, 194.10, and it's going to get me in. But it actually ended up getting a horrible fill again. I will admit I should have used a stop limit order, so because I would have gotten a better fill. So right here, this consolidation, I saw it here. I said, okay, my stop will be this little last buy up here. So the stop will be about 192.50, and my entry is going to be here at 193.94. So you'll see here, I actually ended up getting filled at 194.49. Horrible fill. Horrible fill. So now I'm risking about $150, and I got filled at the top of the candle again. So WHR, I got filled at the top of the candle on the way getting kicked out, and now on Triple M, I'm getting filled all the way at the top of the candle, getting filled in. So just horrible luck with the fills. This one definitely could have been prevented, because it actually ended up, as you can see here, it actually ended up pulling back below 194. So if I would have put an order from 193.94 to 194.10, I could have gotten a better fill. But unfortunately, it didn't end up playing that way. And to me, I was going to try and hold it as long as I could, because I thought in my head that the 200 is going to be definitely a magnet, because you'll notice here that it actually went up. So people actually bought it, interpreted the news as it going well, but then people started taking profits and sold it off. So I was thinking, okay, if we pull back to the 200 where I think it's going to go, it's probably going to pull back to there and maybe get rejected, maybe climb up and over. It doesn't matter. I think the 200 is where this stock is going to go. So I ended up getting filled there. As you can see here, my fill at 952, 75 shares. Terrible fill. My target was going to be up here at 196.50. So I was needing $2. So held Triple M for a while. Sold at 10.27, so 10.27 is here at 196.48. So I sold half, and as you can see, Triple M has not stopped. So in my theory of it going to 200, I was definitely right. It's sitting. It hit a high of 199.35. Yeah. So, and it's still climbing up, and it's still above VWAP. It's still above the 9. So I definitely think it's going to be up there soon near the 200, but I already pieced out all of it. So I bought here 194.49, sold at 196.48, then I sold another 20 at 197.43, and then I sold the last 20 at 187.66. So I ended up banking $191 on Triple M. So now I am slowly digging myself out of this hole. After I took that small loss on Facebook, I said, okay, I cannot take any more losses. That is, I'm basically hit my max stop for the day. But I told myself, okay, I'm not gonna lean, too much into this trade. I'll just take a regular $100, and it ended up actually working out. So everything just seemed to go in my direction in that instance, and I took that one more trade, and it actually ended up paying off. So booked $191 on that. Let's see here. The other trade I took, I don't think I talked about PayPal. So talked about WHR, Facebook, Triple M, PayPal. So PYPL. So I'm not 100% sure on this. That's just, I think, what the news said. Here, let me look it up real quick. How fine tech stocks are doing. Google parent Alpha. Okay, so apparently I read that as Google owns part of PayPal, which to me, cool. Google has good earnings. I think, yeah, so Google ended up getting good earnings, so it's just going sideways. I wouldn't really trade it. But so they own a large stake of PayPal or all of it. I don't really know. Honestly, I really don't care. As a day trader, I don't have time to interpret all these numbers and like all these news. Like whether it's positive or negative, the chart will tell me. So that's why I don't take the time to read into this news, because it's it's like mind blowing to when people hear me say this, but I really don't care what the news are. I couldn't care less what the news are. It's whether people and how they're reacting to it. Instead of being proactive and hopping in on some sort of rumor or something, I'm reacting. I'm just basically hopping into the wave of either buying and selling and just hoping to catch some of it on the way up or down. So I noticed that PayPal was actually gapping up. So Google's parent company, that's what it says. It's gapping up slightly, and it's above 52-week highs. So this is the 52-week high here at 89.62. And so it's gapping up above 52-week highs. So I'm going to look for a long. So just a given, I'm going to look for a long. That's the correct thing to do because the trend is your friend. So I'm going to look for a long, and I didn't necessarily like this pullback here because this candle is kind of large. But I looked back over at the 1 minute chart, and I said, well, it's starting to round back up. So I saw it around here. So it came up, it held VWAP. It didn't really hold VWAP, but it was kind of teeter-tottering and just consolidating across VWAP. And I said, if it comes back up over 91.40, I think I'm going to hop in. And my stop will be down here at 91 at the whole number. So it'll be 90.99. And so I got in 250 shares. So I'm risking about 40 cents. And I hopped in. So I hopped in right at 91.38, right at 10.02. So right next candle, right here. Right here it came in. Here, I'll switch back over to the 5 minute. So right here in this candle, I said, okay, not really the best setup. It's not a very orderly pullback like I would like, but it is holding VWAP. It's starting to curl back up. The 9 is holding it, and I'm going to take a shot at it. So right here, I needed to get back up to high a day. So 91.80, I ended up hopping in PayPal, and I actually ended up taking, 20 minutes later, I ended up taking my partial. So I took about half at 125. So right here at 91, probably this candle, 10:30, what's it say? 10:23. So right here in this candle, actually. So I ended up taking it at 91.80, and I just started piecing out of the rest. So, and then I took another 65 shares at 92.13, so up here near highs, 92.13, and then I took the last 60 here at 92.06, as I was thinking that after this little doji we were going to pull back, which we did. So that's the advantage of knowing how to read candlesticks. This, to me, this is a strong buy. There's a lot of volume behind it. This is a lot of volume, but it's a lot of indecision. A lot of indecision in that candle. It shows you that there's a lot of sellers at the top and there's buyers still at the bottom, and they're just meeting in the middle. It's basically just picture two war scenarios, I guess, just people, the North and the South, just kind of fighting, and they're just stuck, stalemate in the middle, and they just don't know what to do. So, and the next candle is really what's going to make the next decision. If you go below that, that means that the North, the sellers are, wow, this is like a American Revolution type analogy, but whatever. But so if the next candle goes below, that means that the sellers are winning and it's going to pull back. And if you go above, that means that the buyers are still in control and that you're going to still keep trending up. So now I decided to take the rest of it. And remember, I was only risking 40 cents, so about $100. I ended up making $142 by just piecing out of it on the way back up. So that big loser on WHR, 276, really small loss on Facebook. Although I think I would have taken probably half on that if I would have stuck with it, but I'll stick to my decision. I just did not like what the Qs were doing. Triple M, I think I played that one phenomenal. And PYPL, held it and played that one really, really well as well. I'm only up $30 on the day. And it's really not about the money. It's just about how I played those stocks. I really think that they were played perfectly. They were read pretty well, an exception to the WHR trade that I took. But it's definitely way better than being down. So I had a good day yesterday. I think relatively, psychologically, today was a very good day. And yeah, if you guys have any questions, make sure to put it down in the comments section below. And I will talk to you guys next time. Bye. What's up, guys? It's Miguel here with Market Open Trading. We're actually getting ready to go out to the fishing spot. It is Tuesday afternoon, about 1 p.m. You might be wondering, how are you going to go fishing in the middle of the week? Well, I finished work this morning around 10:30. My morning starts around 9 a.m. and an hour into the day I was done. I made a few $100s this morning, and I figured I might as well go fishing. Now, I've actually designed a course that shows you my system from A to Z, everything that you need to know on how to get started trading stocks. The best part about that is that it actually comes with one-on-one mentoring. You'll get to interact with me on a weekly basis, and you'll get all your questions answered. So if you guys want to click on the link below, I'll see you guys in the room. Remember, guys, live life on your terms. See ya.